Thanks for tuning in to another season of Fiscally Fit. This show is brought to you in part by STLT, Scholars Today, Leaders Tomorrow, and Wells Fargo. We have a great show lined up for them today, Casandra.
I am so excited,
Are you excited?
Yes.
Okay, so we're going to be talking about something that's very near and dear to the both of us.
Savings.
Yes, savings and entrepreneurship. Yes. Can't say the same about the entrepreneurship,
Right.
yes. But today we have a very exciting show. We're going to help out a lot of our entrepreneurs that might be transcending into just being a self-employed entrepreneur to one that's going to be building an actual practice. So it's really going to be a great show.
And even better, at the end of the show, so this is why you need to stay tuned, we'll be having someone who started her own business in terms of a hair care line. We're talking about manufacturing, marketing, PR, all that good stuff. So this is going to be a really good show. Before that, we'll have a CPA teaching you on how to get your taxes together, the loopholes, how to get your book started. So if you're a starting entrepreneur or a seasoned business owner, you definitely need to stay tuned.
Yes, this would be a great time for you to go ahead and grab your pen. Make sure you get some takeaways. We know we might be competing with a lot of things that's taking place in your household right now, children, other television shows, the internet, but this is a great show to focus in and hone in on some of the ways that you can save as an entrepreneur. Our actual first guest is Ann McNeil. The most exciting thing about her, she's built her business in a predominantly male-dominated field.
And which field is that?
Construction. That's right. Hard hats and lots of yellow caution tape. That's right.
So we have a lot to learn. But
Yes.
wait. How do you save? You're an entrepreneur, Shani. What is it that you do on a monthly basis to save money in your business?
One of the most consistent things that I would say in my business is that I'm constantly trying to look at those things that add value. What is going to add value? Does this marketing tactic add value, or is it just time? Is this putting me in front of more customers, or is this just glamorizing what I'm doing? Is this actually effective? So that's where I focus my energy on finding, is this valuable? So that's one of the most important takeaways that I could give to any entrepreneur. Make sure that you're actually spending your money where it's making you money. What would you say the one thing that you do consistently month to month to make sure that you're saving as an entrepreneur?
Well, the biggest thing in terms of entrepreneurship, you try to surround yourself with different products. You know, you invest in products to make sure that you're good. So conferences or speaking things or emails or conference calls. So I end up enrolling in all these different programs, but every single month I say to myself, okay, is this making me more money? I give each program about 6 months to prove itself. So you say that you could help me make an extra $100,000 this year. Have I made $50,000 by the 6-month mark? You know, really making sure that I'm doing what I'm supposed to do, but it's always important to review those bills and to make sure that they're serving you in a fashion that brings you more money and adds value.
Yes, that is very important. So we're going to go straight to commercial. When we come back, we will have Ann McNeil of MCO Construction. We're very excited. We hope that you are too. This show is brought to you in part by STLT, Scholars Today, Leaders Tomorrow, and Wells Fargo.
Welcome back to Fiscally Fit. Now, our guest today, Ann McNeil, the president of MCO Construction Company. Oh my goodness, she has so many words of wisdom for her decades and decades of experience. Now, with the Entrepreneur Savings Guide, she will teach you the steps that you need to save as an entrepreneur. So, Ann, tell us all about it. What are your #1 tips when it comes to saving as an entrepreneur?
Well, actually, what I'd like to encourage future entrepreneurs and really also professionals who aspire to be an entrepreneur, really set a goal first. Set a goal for what it is that you want to achieve in your business. And oh, by the way, most of us start our businesses to make money. But seldom do we learn how to make the money make money.
So what do you mean by that?
Tell us more about that.
The money make money.
Well, for example, you get a salary as a part of your business. You know, you start a business and hopefully after a while you're able to take a salary. But once you take that salary, do you pay yourself first?
Right.
Do you pay yourself first?
Because sometimes what I see when I speak to a lot of entrepreneurs, that's kind of like, you know, in the building phase, a lot of the times they just don't have good management. So a lot of the times, not only they're not getting paid, some of the bills are not getting paid, like it's just all of it is just, you know, one big mess actually is what it is. Instead of it being management, it's actually mess. So what you're saying about the principle of paying yourself first, that can kind of secure that they will have a salary. That's great.
So starting out, how do you even know what to pay yourself? Where do those guidelines come from?
Well, I want to go back again to the whole idea of have a goal. So if your goal, say by the end of the year, is to have saved, and from the saving to invest a certain amount of money, of course your business must be generating that money first. So that's another conversation.
Right.
Have that conversation now. What happens? Because a lot of the entrepreneurs, especially in my age group, they typically, their business at this point, they're kind of stabilizing. So in some ways, they're not really having that much income, and to be, you know, all of this sounds great. It's great, but I like to take things apart so that people watching can really, really, really understand it. So some people, they start a business and it's not really, you know, they don't even understand, like, how am I going to pay myself a salary? You know, I talk to so many different business owner just because, you know, I surround myself around other business owners, and that's kind of like their conversation. Like, it's kind of like somebody came in their life and went, you know, and they're trying to make sense of it.
Well, what I just could talk about what I did.
Okay.
And actually what I did prior to starting my business, I read a book by Napoleon Hill entitled Think and Grow Rich.
Oh, I love that book.
And
my absolute favorite.
as I read the book read me. Long story short, I gleaned from the book 4 action item steps where he talks about how to create riches. And the first thing he suggests in the book is determine how much money you want to make. So you take a young entrepreneur or older entrepreneur who wants to start a business, how much money do you want to make? You determine what that number is. The second question he asks in the book is, what will you give in return for the service? So whatever the product or service you're going to sell, in my instance, it is construction. The third question he asks is, by what date?
Oh.
So you set a specific date you want to have the money. The fourth question is, determine an exact plan of action of how you're going to achieve that money. So I think that answers one of the questions you asked.
Definitely.
That's
about
very helpful.
people really not being very clear. But once you can determine the action item steps, every step of the way, how do you fail with a plan you can see?
Right. Planning is so important in terms of being an entrepreneur. Now, I know that you're big in family and leaving a legacy, and you have taught your next generations to do some of these things. So can you share with us what you've done with your daughter and also your grandson?
We set a goal. Very early, first grade, we set a goal.
First grade?
First grade.
Yes.
What?
First grade with the piggy bank. Why? Because kids love what? They love money.
They do.
And if we teach them early what to do with the money, they grow up to be entrepreneurs that understand money. Because again, we work for the money, but how often do we learn how to make that money work for us?
That's very
And
true.
as an entrepreneur, I think that would be one of the takeaways. If you have a job and you're working for money, how do you take that salary? How do you take that business salary and turn that money into money working? And one of the ways to do that is investing.
So as a woman, this
Yes.
is what I have to know. As a woman, how was it that you decided that, you know what, I'm going to set a goal to open a construction company in a predominantly male field? How did you consider any of those factors, or was
No.
sheer passion?
Sheer
passion.
For money.
Construction? Oh.
Tell me more about that.
Passion for
Passion for money. Again, going back to the book and deciding what amount of money I wanted to make, I knew I could not do it on my current job. So I looked at a lot of opportunities, and this was right prior to the riots happening in Miami. And so what I did, of course, you own your own home, then we bought another home, then we bought another property, and we talked earlier before the show in terms of investing in real estate. And as we began to invest in real estate and we did the repairs ourselves, My husband said to me something that totally changed my life. He basically said, you know, I think we were taught all wrong. We were taught to go to school, get a good education, get a good corporate job.
Right.
And he said, if I had it to do all over again, I'd go to trade school. And I would learn about construction.
One moment, we're going to go to commercial and come right back to hear more from Ann McNeil.
Thank you.
This show is brought to you in part by STLT, Scholars Today, Leaders Tomorrow, and Wells Fargo.
I'm really excited to hear the end of your comment here, Ann. You were speaking about starting a construction business with your husband and where that came from. Can you share with us?
Well, just to repeat, I was just saying that he made the statement that we're often taught to go to school, get a good education, go get a good corporate job. But after doing that, realizing that maybe a trade would have been better. Construction, plumbing, electrical, or something like that.
Something hands-on that you can do.
Exactly. So while I was working on my master's degree, in my corporate job, went to trade school.
After getting a master's?
While working on my master's.
While working on your master's, same time getting a trade school degree. Now that is something amazing.
Yes, in construction.
Wow.
That's incredible.
It is incredible to start in something that you had no experience in whatsoever, to say, I'm going to start anew. But this was really to do something different and to help who?
Make more money.
Make more money.
I mean, the goal is pretty clear.
Exactly.
I love it.
It's pretty clear. It's pretty firm and clear.
Exactly.
And the good thing about this is this has led into other things. When you're really good at something, you build something really firm, it has allowed you to take on some of your other talents. Can you tell us a little bit more about what your business has been able to provide for you?
Well, first, I would like to suggest also with the children, in terms of teaching investment education. We often talk about investment in literacy.
Right. Where do you get that from?
Well, it's investment education. Because when you think of investment education, we teach our children and ourselves how to make money.
Right.
But when we think about financial literacy, we're teaching you about the literacy of the finances in terms of debt focused,
Yes.
not profit focused.
Yes.
Big difference.
That is a big difference.
Big difference. And so that's one of the areas that we begin to, as a family, focus on. And I also own a consulting company, and also have branded myself as the master builder, building stronger and better lives as a professional speaker.
And I have heard her speak. She does very well.
Thank you.
So in terms of just teaching your children how to invest, where does somebody go to get that type of information?
Well, we're volunteers with a national organization called Better Investing, and you can go to their website at betterinvesting.org.
And this is a organization that will teach.
It's a not-for-profit investment education organization.
I'm excited.
And it's open to anyone, families, children, adults, businesses. Because again, you want to know, as a takeaway from this show, what do you do next?
Right.
Yes.
Well, you can go to annmcneil.com,
right.
but you can also go to betterinvesting.org and learn more about, as a business person, entrepreneur, or professional, how do I make my money work for me?
Okay, speaking of making sure that your money makes money, we're going to bring on our next guest, Steven Henriquez. He's a CPA, and that's actually what he does day to day, telling people how to make more money with the money that they already have. Stay tuned. This show is brought to you in part by STLT, Scholars Today, Leaders Tomorrow, and Wells Fargo.
Welcome back to Fiscally Fit. I am waiting in anticipation to talk to Steven Henriquez all about tax time. This CPA, who has 17 years of experience, will share with us some of the loopholes, the deductions, some of the things you need to do when starting your business and really getting your books in order. So Steven, number one thing, what should every entrepreneur know and do when it comes to doing their taxes?
Well, obviously, the first thing is to make sure you have your books in order. And that's something that you have to go throughout the year. That's not something you do, December 31st or January 1st. That's something you have to maintain.
So I don't wait until April 14th or September 1st to really start doing my taxes?
Preferably not.
So how do you start to get your books in order? What does that exactly mean? Can I write a receipt to myself and put it in my bedroom drawer? How does that work?
Well, the point is to have a system, whatever that might be, whatever works for you. Whether that's you're doing it or you hire a bookkeeper to do it, it doesn't matter. Use Excel, use QuickBooks, any method that works for you, as long as you're capturing all those deductions. So at the end of the year, they're there and you don't lose anything, when it's time to put your taxes together.
Do I really need all of my receipts? Like, is that really necessary for me to keep all of my receipts all together, or
The
no?
receipts, no, not necessarily. I always tell my clients, use debit cards, use checks, don't use cash. That way you don't need the receipts. Everything's on your bank statements or your credit card statements. And then you don't forget either. That's
Right.
that's the other benefit.
So that's an easier way to keep your book since it's all electronic.
Much easier.
Okay, that's a really good tip. I'm excited.
That's good. Another thing that I hear with entrepreneurs, they always go, I'm going to write this off. So they have this misconception that they can buy cars and they can get expensive cell phones and they can buy the new computer.
Dry cleaning?
And, all kind of things that they think that they can just write them off. How do you typically deal with your clients that have this kind of, I'll write that off complex?
Well, obviously, one of the things we do is we try to educate our clients. Because I not only want to do what's best for them, I want them to understand what we're doing and why we're doing it a certain way, so that they know going forward, what's going on. It's their business, so I want you to know what's going on in your business.
So what do you say to the person who has that type of, misconception of, I'm just going to write this off? Like they, I know some people that's not even earning $50,000, but they think that they can, purchase a car under their business and just write it off.
It's a matter of education. Like I said, we tell them, look, there are things you can write off, and I tell my clients, look, better you bring it to me and I'll tell you no than you don't bring it at all and it's possibly yes.
So give me a typical scenario when somebody would be able to write off a car.
Well, everyone can actually write off a car.
Tell us more about
but
that.
not necessarily all of it.
Okay.
Anyone that travels for their business using their vehicle, whether it's a personal vehicle or under the company's name, you can deduct a portion of those expenses, your gas, your tolls, and your parking and repair work and whatnot.
But you would have to keep records of that in terms of the amount of miles that you actually drove?
Well, obviously the IRS asks you to keep a log. I've never seen anyone that does that, quite honestly. It's just not realistic.
Then what do you do?
Well, I mean, as long as you have an estimate of what your mileage is, you have an idea of how far you go every day, every week to see your clients and that sort of thing. As long as it's reasonable, then chances of getting audited are very slim. And if you did get audited, what we've done in those kind of situations, we've had people go back, go through your appointment books and recreate it. And hopefully the numbers come out pretty close, and go from there. But again, no one really takes time to do a log on a day-to-day.
Yeah, and the money has to be present for you to actually do a write-off. I don't think people understand that. Like you have to have the money to make the purchase to actually write it off. You can't just buy things that you can't afford and go, oh yeah, I'm just gonna write this off. I've heard a lot of different entrepreneurs kind of like with that process. I'm going to get this computer. I really can't afford it, but I'll just write it off. How are you going to write it off? You got to pay for it first.
Yeah, there's a lot of misconceptions out there. We run into those kind of things all the time. But again, it's all about education and explaining to them why things are the way they are. Not just, no, you can't do that, period. But here's why. Here's why the IRS rules are the way they are.
Okay.
So.
Ms. McNeil, I'm sure you've had lots of experience with taxes and filing and things like that. Can you advise our audience in any way?
Hire a good CPA.
That's good advice.
That's good advice.
How would they go about identifying what a good CPA is?
Well, I think references are always good.
Always.
References are always good because you know that people do business with people that they know, like, and trust. So if you ask for a reference of different business people, normally people would come up with the same person if they're in that same circle. So references.
And I always recommend, make sure that you're hiring a CPA. There's a big difference there. Make sure you're hiring someone who is actually a certified public accountant.
But many people do taxes, especially around tax time, and they kind of get this certified or random certification, so none of those folks.
Well, for taxes, for simple taxes, there are people who are now the IRS requires everyone to register that's going to prepare taxes.
Okay.
So you don't have to be a CPA to prepare taxes. But for your business, if you have for the bookkeeping, for the financial advice and whatnot, you'd want a CPA.
But most people, especially starting out entrepreneurs, say, I can't afford a CPA. I can't afford someone to keep my books. What is it that you tell them in those instances?
Well, like I said, first thing is you can keep your books. It's not brain surgery. But as long as you have to maintain a system and keep up with it day to day. So that's the first thing. Now, at some point, as your business grows, you may not be able to afford a CPA or anyone to help you in those areas right off the bat. But as your business grows, you get to that point where you definitely need to, because you're busy trying to grow that business.
Right.
And you can't always have time to do the back-end bookkeeping stuff. And also, what we run into a lot of times is we see clients that say, oh, I can't afford it. But when we look at what they're actually doing, because they're not keeping good records, they're getting bank fees for bounced checks, late fees for not paying on time, that sort of thing. When you add up those expenses, a lot of times those expenses are more than the cost of hiring a CPA.
Yes.
So if you had someone to help you maintain those records and avoid those kind of costs, Uncle Sam, if you've late on your payroll taxes, that's a big hit right there. So if you have someone to help you avoid those kind of things, they more than pay for themselves.
So what is something that people usually don't know that they can write off that is unknown?
I don't know if it's unknown, but obviously it's not always. But we talked about the car. We talked about that. That's a popular.
Transportation.
Yes. Another thing is healthcare. I think I mentioned somebody mentioned it before as far as health insurance for small businesses, and there is a way for you to get that deduction, because the problem is if you're a big corporation and you're paying the health insurance for your employees, you get that deduction as a business. But as an individual, if you pay for your health insurance, you don't get a deduction. But if you're if you have a business and you pay for it through that business, there is a way for you to get that deduction.
Wow.
I don't want to get into the technicalities of it here,
yeah, that was easy.
but it's there.
That was simple. But I have another question. Many people start out as solopreneurs, right? We have these LLCs that start, I'm going to start my own business. What would you say is the best route when it comes to doing your taxes and things like that as an LLC, or is that the right route to go?
Well, one thing that's the problem with an LLC when you are a solopreneur is that an LLC, for the IRS, well, first thing is you have to tell the IRS how you want to be taxed as an LLC. The IRS doesn't recognize LLCs. There's no such thing as far as the IRS is concerned as an LLC. If you look at the IRS options, they have sole proprietor, corporation, S corporation, partnership. That's it. Those are your options. LLC is not one of those boxes you can check. So you have to tell the IRS how you want to be taxed. And if you don't tell the IRS anything, the default as a solopreneur is
Schedule C, right?
Schedule C, your disregarded entity. As far as the IRS is concerned, that corporation doesn't exist for tax purposes. So you put it on your personal tax return as a Schedule C. Now the problem with that is if you made money, which hopefully we all have, then that income that you have, not only are you subject to income taxes, you're also now subject to Social Security and Medicare taxes.
How much tax is that?
Which is about 14%. So you can avoid that
if
you are a corporation, specifically an S corporation. You get the same benefits of getting it going through in your personal return, which is at a lower rate than a corporate return, but you avoid or can minimize the Social Security and Medicare tax hit. So.
Wow, so this is really good information, Stephen. We'd like to thank you so much for joining us on the show today. And just as a takeaway, I see that we need to look into how we tax ourselves in terms of LLCs and S Corps. We need to make sure that we ask for referrals of who is a good CPA and to really keep good books. So I think this is really good information, Shani. How about you?
I think so. And what's most impeccable is set those goals. This has been a great show. We thank you very much for coming here. If you would like to hear more, because we can only do so much in these conversations from either of them, you'd like to speak more to Stephen, if you'd like to speak more to Ms. McNeil, we do have their information for you. Your email address would be?
Stephen at sjh-cpa.com.
All right, perfect. And you, Ms. McNeil?
at annmcneil.com.
All righty, thank you.
So we're excited because up next we have our small business guest, Shayna Green, and not only that, but our PR expert, Matthew Beatty.
This show is brought to you in part by STLT, Scholars Today, Leaders Tomorrow, and Wells Fargo. We're back with Fiscally Fit. This is a very, very exciting part of our show. It's when we bring in our small business segment. We have a young lady here by the name of Shayna Green and a young man by the name of Matthew Beatty from a company called Illy, which stands for I Love You. So tell me a little bit more about your hair and skincare line.
Yes. Illy is a premium line of products for hair and skin, and they're natural products. And they're sold online at my website, illybeautyco.com. ILYbeautyco.com.
So how did you even get started? Because a person like me who's natural, curly, trying a different product every single day, what made you say, I want to start a new skincare and hair care line when there's so much competition, so many different things to do, especially knowing where curly girls come from? What made you say, I want to start my own line?
Well, I wanted to start my own product line because my background is in public health, and I knew about a lot of the toxins and products out there on the market, and I wanted to be able to provide a product that people could use that was safe for them and could show that they can love themselves naturally and bring out their own natural beauty.
Okay. So what's in your products? What type of ingredients make up your product?
Well, without giving away the secret, of course.
Well, each product is basically formulated based off of the results that we want you to have. So some products have things like castor oil, camellia seed oil, which is a green tea oil, raspberry oil. So things that are from the earth, but basically that can provide the results that you look for in your hair care needs or in your skincare needs.
Okay. So when starting your business, so you have a hardcore product. We're talking about skin and hair care. There's a lot of cost when it comes to that. So what would you say to those sitting at home to say, you want to start a new business, you want to start something with inventory? What were your first steps that you took to get started?
Well, basically you have to have a plan for what it is that you want to sell and then figure out what things are needed in order to put that on the market. So some of the things that I had to think about were packaging, design, marketing, labels, who's going to make the product? Am I going to make it? Are other people going to make it? Where do I want it to be sold? So you have to think about the entire scope of the business before you even do anything.
Right. So you're telling me that you had a whole plan before you took the first step?
Yes.
Wow.
Yes. What type of products are you making? I'd like to hear more about the products you're doing. Lipsticks, you're doing...
Well, they're hair products and skincare products. So I have hair products for women who have straight hair, curly hair, any type of hair. And then skincare products, I have lotions, body scrubs. And
what's your favorite body scrub? I love body scrubs.
Well, the body scrub that I carry is called Revive, and it's a foaming body scrub. And basically it has sugar in it to exfoliate the skin.
Okay, that's really exciting.
Good.
So what would be the difference between, let's say, what I could get in the local Walgreens versus supporting you as a small business?
So the reason why I wanted to start my own product line was because the things that are sold in the stores, they claim to be all natural, but most of the times they aren't all natural. So they have a lot of synthetics in them. So I want to be able to provide a product that people could actually say, I'm using a natural product.
So it's 100% all natural?
Yes, 100%
So
all
everything,
natural.
and this is something that I read in one of my organic books, kind of like this is the rule of thumb, everything in your product, can I eat it?
Yeah, pretty much.
Okay,
Yeah.
well, good. That's a good rule of thumb. If you can't eat it, then it's not that natural, I mean, especially when we carrying the baby. It definitely got to be something I can eat. Okay, good. So raspberry.
Oh, I'm loving the sugar scrub. So
Yeah,
so
the
let's
sugar
hear from Matthew. So how did you guys exactly meet? Now this is for the entrepreneurs who are looking to hire. So here it is. You know that you need marketing, you need PR, you need somebody to put your name out there. How did you even meet up with Matthew? How did you get together?
So what I did was just place an ad on Craigslist, and I interviewed candidates from the people that responded to the post.
And basically, when I decided that I wanted to kind of move into consulting, I realized that, you have to kind of use unique tools in order to kind of get the job done. And so, other ways of finding clients other than, kind of going out there and beating the pavement is taking it online, having an active professional Twitter account or having an active professional Facebook account. You know, things like Craigslist, going, you know, on these avenues that are, you know, relatively new, you know, but still provide like real business opportunities.
Okay. What are some of the things that you provided to her? Because she has a unique business, and it's unique now, but there's a lot of people coming into this, you know, storefront that they want to do natural, organic. So what are some things that you've done to kind of get her out there to the general public?
Sure. Our strategy has focused on building a community. And most of what most people miss in public relations is that it's about building relationships. That's really all that we do, is we take, you know, the product that a company has, and we connect it with, you know, their audience, and we seek to engage them in a way that we're not necessarily, you know, pushing the product to you, but we're convincing you to invest in our product and in our company. So that's all that we do. That's our focus for Illy, is between Facebook and Twitter and our blog, which is we'll be launching soon. We're just about building a community of believers in the product and in the company.
So I know Seth Godin talks about building a tribe and making sure you have your followers, so then they now buy into you. So what are some of the key tips you would say to those who are at home to say, this is how you start your community, this is how you start your tribe, this is how you start your following?
Sure. One is first establishing who is your market, who are you targeting, what does that tribe look like, and then once you find that out, then finding where those folks are. The good thing about social media and, you know, tools like Facebook and Twitter is that chances are your market is already out there and it's already active. So all you really have to do is plug into them.
Yeah, find it.
Go find them. Go find them online. Yes. So the first step is establishing who are you selling to. Who is your market? Then figuring out where they are. So if they're on Facebook, start up a Facebook fan page. If they're on Twitter, find the right people to follow on Twitter and start, you know, entering those conversations and talking with your potential customers. And then once you begin to engage with them, then you start sharing a bit about the company and sharing what the products are that you're selling and what the services that you're offering, so that people buy into you, not because, like I said, that you're selling to them, but that they realize that, you know, by doing business with you, that then adds value to their life as well.
You two have been incredible guests. Both myself and Casandra have found you to be very enriching. We hope that our listening audience is able to take away something that they can use today, right now, in their business. Thank you for tuning in to Fiscally Fit, and we will see you next time.